This is Chuck Carnevale, and I'm the Chuck in the Markets Up Chuck. Today's blog was titled "A Catalyst for Growth," and in the course of doing my regular research, as I point out in the written part of the blog, I often come across what I consider to be some real interesting investment opportunities. I came across one doing it in the course of yesterday's work that I think was very exciting. It's a company called Catalyst Health Solutions. Catalyst Health Solutions is a pharmacy benefit manager with a twist. It does things a little differently than some of its bigger competitors like Medco or Express Scripts, etc. But a couple of things about the company I think are very interesting. First of all, if you look since 2003, this company has had very, very consistent earnings growth at over 35% a year, and it's gone right through the recession as if it wasn't even there. In the last quarter, they just reported growth over 20%. So the company is doing extremely well. It has no debt on the balance sheet. It's about $1 billion market cap, has about $100 million or $105 to $10 million in cash. And I do want you to notice that the stock price, when markets were more normal, has generally been a lot higher than it on a valuation basis it's currently trading at. Currently at 18.5 times earnings, it's actually trading at one of the lowest price to sales ratios that it's ever traded at, as you can see by this graph here. And it's also trading at a discount to its forecast growth rate. It's trading at around 18.5 times earnings and forecast to continue to grow at 20% a year out to 2014. If the stock just traded at a PEG ratio of 20 times earnings, that would represent, and the earnings growth was as forecast. At 20 times forecast growth out in 2014, you'd have a $68 stock that you could buy at $24 today, and that would be over a 20% rate of return. The recession has clearly created an opportunity here to invest in a company that has tremendous growth potential and is currently trading at a very sensible valuation. And if you look at this over the last 7 years and compare it to the stock market, the stock market's literally been flat over this period of time. There's been no money to be made if you owned an S&P 500 index fund, and you could have averaged over 31% a year owning Catalyst Health Solutions. So, clearly this is a little catalyst for growth. As always, I encourage you to do your homework, but here you're looking at an opportunity for a company that is a great demographic play. Obviously, reducing health care is a major concern, for the current administration, but for businesses and the citizenry of this great country all over the country. This company has a very interesting approach. They do its business slightly differently than most pharmacy benefit managers. They charge them a fee to manage their company's pharmacies. They're very well diversified in their client mix. I encourage you to look into this deeper, and I do encourage you to do your own homework. But it's a great demographic play. It's a company that's really ideal for the future. You can buy it at a very sound valuation now. It has a lot of potential for growth. And I guess the main point is, if you're thinking of all the doom and gloom of the recession, here's an example of a company that's doing just fine. But thanks to the recession, the price is very, very reasonable today. I'd look into this further, but I hope this has given you some insights into how important it is to be looking specifically rather than just be thinking generally about the markets or the economies. This is Chuck Carnevale saying thanks for listening, and talk to you again tomorrow.